Does the recent Bank of Canada announcement mean that we are going to be in for a huge pivot in the real estate market? In this Canadian real estate market update, we are going to discuss that, many more topics, get right into the data so that you can make the most informed decisions, whether you're a buyer, seller, investor, or just keeping an eye on the marketplace. If it's your first time to this channel, welcome. My name is Justin Conoco, owner of Prime, and we have one of the most cracked teams in Southwestern Ontario covering all asset classes of real estate. We have thousands of transactions worth of data, and we are telling you what's happening, boots on the ground, no fluff. We tell you how it is, as our goal is to be the most trusted name in real estate. Make sure you hit that like and that subscribe button so you don't miss any future episodes, access to off-market deals, and our exclusive Prime Masterminds, where we bring our community together live in person to discuss all things real estate. More than anything, we want to know who you are. Jump in the comments, let us know who you are, where you're from, and most importantly, what questions you have so that we can address them. Or even if you disagree with us, we are here for community. So first and foremost, the Bank of Canada announcement. So they made their announcement on March 8th, and they held interest rates at 4.5%. They are also signaling inflation to balance out around 3% by mid-2023. You have people on both sides of the spectrum freaking out. You have agents that have been waiting for this, telling buyers there's never been a better time to buy. This is the bottom of the market. You have other people saying that there's still a huge correction to come and that the Bank of Canada should have increased rates again. Where do you fall on that spectrum? Jump in the comments and let us know. What I can tell you is we've been doing these updates for years, and over the last 8 months, with the interest rate climbing month after month after month, buyers have definitely been feeling the pain with the home prices dropping to where they would love to purchase the homes, but the cost of borrowing still pretty much the exact same because they have an increased interest rate. So that payment is kind of offset, even though the prices have dropped dramatically. Sellers on the other side, a lot of times invariable, are calling us with those increasing pressures, looking at, well, if I've capitalized on the price of my property, maybe I should sell, take the profits that I made on that property and get into another asset class. We are also working with lenders on a weekly basis to get updates as to the lending products that are available, what the banks are doing, how they are looking at the future of mortgage rates. Are people going fixed? Yes, quite a few people are going with a fixed 2 or 3 year mortgage at this point in time. Variable seems to be a little bit more risky, as the Bank of Canada in their announcement also indicated there may be more interest rate increases to come. Another thing I'm thinking about when it comes to the announcement that the BOC made was, great, housing sentiment got crushed, prices came down, still a lagging indicator. I think the pressures that we felt are still going to be a couple more months till they're realized, but the cost of energy and the cost of food are the two major things that need to change. The grocery store bill is still hammering people, so it's definitely something to watch. And the last thing I'll share is a very intelligent economist that happens to be a client of mine was just telling me real estate and economics, albeit macro, are still something that you need to consider in the micro. Case in point, the London, Ontario market is increasing in terms of employers and job opportunities, meaning as there's massive, massive employment opportunities coming to cities like this, there are going to be growth demands from a real estate perspective. We still have very, very limited supply, and we are seeing competition still happening in the marketplace. 8 out of 10 offers I wrote last week ended up in multiple offers. We saw one property that had 19 offers on it, albeit other properties aren't getting showings or offers at all. So it really depends on what you are selling, or if you're purchasing, what you're acquiring. Another statistic that may help you is listings are selling for around 97.6% of asking price. No, you're not imagining things. It did just switch to nighttime. This is an indication of how active the market actually is. I was shooting the market update, but business comes first. Had to deal with an offer on a property in 2 appointments, but I'm back at Prime headquarters to deliver the goods. Let's dig into the data side of things. So this is InfoSparks, which is the entire ITSO real estate board. Really gives you a nice snapshot of what's happening in Southwestern Ontario. There are trend lines across Canada. If you want market specific information, just send me an email at info@primebrokerage.ca. Happy to get you some local information as well, and some of the best talent on the planet. Let's go over the average sales price. So if you're looking at the average sales price today, February 2023 was $757,265. If I look at last month, you're looking at $723. So the average sales price actually increased. Now, the big stat that everybody was looking at was, what was the February pricing this year compared to last year? 757,265 to 983,274. So down about 200 grand plus from last year, but everybody expected that. Any headlines right now that are screaming record-setting lows in real estate are literally just comparing February to February. This is a really good example of how the mainstream media sometimes doesn't give you a real snapshot of what's happening in the marketplace. Because if I look at a maximum trend line, you can see that if you took this out, that we are still trending, if you drew a line from here to here, in an upward trajectory, which is very interesting because that's not the story that the news tends to tell you. We do this every single month, and we are trending exactly how we typically are when it comes to the number of new listings. Let me go to a 3-year trend line. This is interesting because all of a sudden the number of new listings doesn't seem to be the normal spring market increase that you would see. A lot of people are very hesitant because maybe the values aren't really there for them. But what that's going to do is put more pressure on the marketplace with restricted inventory and buyers excited about a holding of interest rates entering the marketplace. The actual number of homes for sale is only 14,177. And you can see at the very bottom that December through February last year, there was not many homes on the board at all for sale. So there are still properties out there, but still underneath where the peak was. The volume of actual sales happening, December was a very quiet month. It's up almost double from December. So people are out there shopping. Average days on market is down to 19 from 28 in January, down to 19 in February. That is also very significant. And the months of supply, albeit was 2.2 in December, meaning if we didn't sell another house in December 2022, we would be 2.2 months on market before we ran out of houses to sell. It's increasing to 2.5. I love this stat, percentage of original list price and the percentage of list price. This should give you an indication if you're offering on a property. If it's $1 million property, your offer should be $970,200. But that is the original list price. If it is the average percentage of current list price, it's 98.2, so 980,200. What's the difference? Original list price is if you had to do a whole bunch of reductions, it's 97%. Maybe you started at 1.2 and you reduced. They're going to calculate that based off the original 1.2 versus a sales data point based on your current list price. One tip for sellers out there, do not chase the bottom of the market. Meaning, if you think your house is just better than everybody else's and you list at 1.5 and the market is at 1.2, if 3 months later the market drops even more, if you list at 1.2 and the market's dropped to 900, you're going to drop to 1.2 thinking, oh, I can sell my house now. Look, I'm in range of what you originally told me, but the market dropped to 900. So many sellers are chasing the bottom and it really hurts them in the long run. Price per square foot actually went up from $421 to $427. So if you're calculating average dollar per square foot of sales in your area, you can use this marker. But again, real estate is micro and not all homes are created equal. Depending on if you're looking at new construction or resale, it makes a huge difference. Prime has one of the best new home construction programs on the planet. If you're looking to build, we can help you with that and really showcase to you some different builder options that are out there for you. And if you're looking to acquire land, we can do that for you as well. We actually find infill lots and off-market properties all the time, so we can tap you into those lists. Just connect with us below. And the total volume of real estate traded was increased to $3.2 billion. So what does this mean for you? Well, let's break it down to sellers, buyers, and investors. If you're a seller, having a strategy is more important now than ever. I know people think real estate agents are commodities, but I am not a chair or potato. You can't compare me to 5 other people next to me. You really want to make sure the person that you're working with has a dialed in pricing, marketing, and negotiation strategy to create the urgency. A lot of people are missing the mark by thinking that they're just going to wait or plug it into MLS or do nothing but price reductions to achieve a sale. In this market, you could reduce your price till you're blue in the face. It doesn't mean the buyers are going to show up or offer on your property. So make sure your strategy is super dialed in and you know the platform that you're actually paying for. And the key for buyers, you're never going to be able to time the market. I was talking to a really good friend, client, and one of the top mortgage professionals in the country. And he's actually an investor himself. And he was talking about how he's never, ever tried to time the market because nobody's ever won that game. And a lot of people that are thinking that they're waiting for the bottom are going to watch the bottom go right by them, while other people that are savvy real estate investors or purchasers realize that we've bottomed out. Like if you haven't think that home prices have corrected or they haven't corrected enough yet, I don't know what statistics you're looking at. It was the largest correction we've ever seen in the history of our board. And if you're making your decisions based on 8-month time spans and thinking, well, it's going to correct another 10% or 20% or 30%, you think you're going to time the market, you're going to miss a ton of opportunity while other people are out there looking at the next 5 to 10 years. What does that mean? I mean, a lot of people making purchases today are looking at what does 2025 to 2030 look like? A lot of our business planning is geared around that. We are rebuilding the foundation of Prime for the future. Yes, we are acting in today, but we're not day trading real estate. If you're looking to flip property over the next 6 to 8 months, definitely maybe you want to cool your jets a little bit and understand the position that you're in. But also, so many people I've seen over the years trying to time the top or time the bottom, just watch the market go right by them. So talk to a power team of people, which should be your mortgage professional, your real estate agent, and your lawyer. Make sure you're not working with people that have commission breath and are just trying to talk you into a deal just for the sake of it. But get a health checkup of your financial checkup and your actual needs and see if you should be in the market or if you shouldn't. And if you should, get good people around you that are going to give you the right advice as to where you should be looking for the opportunities. And as far as investors go, we were just with 1,000, some virtual, some in person over the weekend with Scott McGilvery. Fascinating to see how they are navigating the marketplace. We are seeing one of the largest wealth transfers we've ever seen. So people that purchased 2015 to 2020 realize that they're not going to see February 2022 prices for some time. So even though it's dropped, it still makes more sense for them to sell now. The purchasers and the new investors can buy an asset at a good cash flowing cap rate, and then they can ride the 2025 to 2030 train. So we are seeing a lot of people getting liquid out there, looking at deals, papering a lot of offers, and you really need to understand the numbers. Like I said, we don't day trade real estate, but if you're looking to understand investing at a very high level, let us know. We can explain to you what that looks like. So suffices to say, it is a roller coaster of a marketplace. It has been. If you look at all the last market updates, we really try and give you the data as we see it. We don't try and sugarcoat anything, good, bad, or otherwise. Let me know if you got any value from this market update. If you did, hit that subscribe and that notification button so you don't miss any future episodes. Keep in mind, this is the channel where people just like you are trying to find all the best areas to live in Southwestern Ontario. Get connected with the best agents on the planet. Just connect with us below if you ever want to hop on a one-on-one call with us. And more than anything, we want to know who you are, where you're from, and what you want us to cover on the next video. Jump in the comments, let us know, and we'll see you on the next one.